The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. This is Matt Tour with Insurance Agency Marketing Services. Thanks for joining us today on our webinar. We'll be going over some details on stretch qualified and non-qualified accounts. I know it should be a good webinar. We're not going to last way too long, probably about 20 to 30 minutes this morning. And I'm in the marketing department on the annuity end, so if you do have any questions along the way, be sure to get those typed in. You can also contact me after the webinar if you do have any specific questions on any items on cases you may be working on, questions on the webinar itself, any information we discussed today. I'd be glad to get that out to you. We also will be sending over a taped version of this webinar. When we're done with this morning, you'll go ahead and get a link this afternoon. You can go ahead and review it at your leisure if need be, so make sure you are aware of that. We do offer some really nice programs to our office here at IMES. We have our referred producer program. You can earn additional incentives based on referring agents to IMES, and then you will receive an override based on their production. So if you refer an agent that's done $1 million with us over a year's period of time, you'll receive 20 basis points on that, which would be a $2,000 cash based on that client's production. So great way to earn some additional dollars, and we pay this out once a quarter. I have agents that call me every few months asking where their check is, how much it's going to be, all that good stuff. So I know it's definitely a very popular item we offer through insurance agency marketing. And if you haven't referred any agents to us at this point, now's a great time to get that done. I know we've seen a really nice increase in production in 2018. We're up about 10 to 15%. So some great numbers coming in on the annuity end. We also have a marketing reimbursement, reimburse $100 for every $100,000 of annuity premium you submit through IMES on the indexed annuity side of the market. So great incentive there. We also have our new producer builder bonuses. You can earn different incentives based on different levels of production. We have a $100,000 level, a $300,000 level, and a $500,000 level. You can qualify for an iPad, a couple different seminar coaching systems. We have a Ritz-Carlton weekend getaway package you can qualify for. Got some different cash incentives based on the different levels. So really a wide variety of programs you can qualify for based on your production through IMES, and a great way for you to get some additional incentives based on your production through our group. We have a great back office support team at the office here in Elkhorn. We've got a great creative team that helps you with creating different pieces you can use for advertising. Maybe you want to create a website. Maybe you want to do some Facebook marketing. I mean, a lot of different things you can play off of based on the skills they have over there in the creative department. We also have a great new business team. When your business comes into our office, it gets scrubbed. We call you with any questions based on that new business, and then we will follow through all the way through issue and follow the way through until you get paid. So really handle the process from day one all the way through the end of the process. So great new business team. I know they've got great experience on that end. We've also got some great marketers here in the office on the life and annuity side of the business. So if you have questions on a life case, you can call the life department. Case on the annuity end, we'd be glad to help you on the annuity side and be able to help you out with your questions, any quotes you may need, and any additional expertise you may be looking for. Definitely give us a call. We also have our contracting is available online. You can do paperless contracting. You can get licensed with a number of carriers at one time by filling out one set of licensing. So it really makes it very easy for you on your end. Again, as I mentioned, our creative team, they do a great job on rebranding your business. Maybe you want to do a website development. As I mentioned, the social media consulting, We got some great email marketing ideas. Maybe redo your business card, maybe redo your business stationery. Some really good stuff they can help you out with on that end. And I know we've helped numerous agents over the last few months on rebranding their business, and it's really helped them out in getting their name back out there. Kind of a new and upcoming company. So really a nice program we have available through the creative department. We've got our company website. You can get on there 7 days a week, 24 hours a day. You can pull off, any block of information you may need. Maybe you need some forms. Maybe you want to download the current interest rates on the annuities. Maybe you want to download some tax information. A lot of really good information you get right off our website. We've got some great industry links on there. Maybe you can look up an AM Best report on a company, or maybe you want to look up some other information on annuities based on rates, products, state availability. All that is available right on our website. So really a good tool to use. And if you have not been on our website, it has a lot of good illustration programs available on there for long-term care, life insurance. Maybe you want to look at an annuity income rider payout. All that is available right on our website. So if you have not been there, it's www.imsinc.com. You can get on there and use your email as your username, and then of course you'll need to create a password to progress through the site. Really some good information there you can download off the program there. We also have a software package. It's available through our office here to our agents. It's called the Retirement Analyzer. Really good client software program. You can go ahead and plug in your client's financials into the system. It's going to crank out some really good information based on, waiting 15 years to retirement, 20 years to retirement. It just depends on your client's specific situation. You could plug in different variables. Maybe you got some health issues. Maybe you've got a situation you're going to buy a second home. A lot of different variables you can plug into the software. And it's going to give you a really good holistic overview of your client's situation. It's got some great graphics on there, really colorful. I know we have a number of agents have used this and continue to use this. Marcus in our office is the main guy to talk to on the Retirement Analyzer software program. Really a good package to take a look at on that end. We have a wealth management team in the office. I know we launched this just over a year ago now. We've had some great success on the wealth management side, and I know that we've continued to see a lot of agents involved on getting their Series 65, continuing their Series 6 or 7. We do have some additional help we give towards that. If you have interest in pursuing some additional information on the wealth management team, I know we've got a great team there with Charles, Mike, and Joan. Just check off yes, you would like to get some additional details on that wealth management team. We'd be glad to have one of them give you a call, set up an appointment with you, and see what your situation is. Again, if you do mark off yes, we'll go ahead and have them set up an appointment for you. But I know it's really good to be well-rounded, be able to cover all of your clients' needs on their investing, be it in the market, be it in the insurance side. You want to make sure you have as many outlets as you can for your clients. And I know that some agents that refer their agents to other individuals to help with different sides of the business. It could be good to start with, but you hate to refer someone to a friend and all of a sudden you lose that client because they're putting all their assets with your friends. So I would always look at maximizing your overall scope in the market and then try to handle as many sides of the business as you can. I'm going to leave this open for another 20 seconds. Again, if you do have an interest in getting some additional details on the wealth management side, I know they've got some really nice platforms. They've had some great returns the last number of years. And we had some clients making 14, 15, 16% or more off those platforms this last year. But really some great options for agents and clients to choose from based on those different platforms. But again, if you do have interest, mark off yes. Otherwise, I'm going to get this closed up here in a second. And be glad to help you out on that end. We also put on a Life and Annuity Academy. We do this about once a quarter. I know we have it going on this week up here in Omaha in our home office here in Omaha, Nebraska. We bring in typically between 30 and 40 agents to these meetings. We have a lot of information we go through, different companies. We bring in some really good salespeople that help with sales concepts. They go over, some of our top agents go over what they do in the field to get in front of more clients, to close more sales, create more leads. I mean, there's some really good information to go over at these academies. We have, I know we have about 6 different companies coming in today to speak to agents based on what they offer in the field. Some great information they'll be going through with the agents, and then we see a lot of interest in what's being, spoken about on these meetings. We always see a nice perk in business when agents go back home after our Life and Annuity Academies. But if you have some interest in possibly attending here down the road, we'll probably do our next meeting sometime in June. Not in June, but actually in September will be our next meeting in the next quarter. And it's probably going to be in Des Moines will be our next meeting, and we'll have some additional details on that coming up soon. Let's have something you have some interest in possibly attending here down the road. Mark off yes on the survey I just launched. We'd be glad to get you some additional information on the meetings and when the next one's going to be, and so on and so forth. We go over a lot of information on life insurance also. We've got some great IUL products we market, single premium contracts, final expense, term, wide variety of different programs that your clients can choose from based on the life side. We've got a great life team. You can give Mark a call or Adam or Sandy. They'd be glad to help you out with any quotes you may need, help you with any specific questions, and they'll take care of your needs on that end. So definitely keep that handy on that end of it. I'll leave this open for another 20 seconds now on the voting for the meeting. Again, if you do have interest in coming out to one of our academies, mark off yes. It's all expense paid. We take care of your lodging. We take care of your food. Basically, the only thing you have to do is to get to your airport or drive into Omaha if you're somewhat close. We'll pay you for mileage. I mean, we just want to make things as easy as possible for you based on your time commitment with us at these meetings. We know bringing you out of the field, and we will make sure it's worth your while to pursue these types of programs. So again, if you do have interest, mark off yes on the sheet here. I'll be glad to bring you in. Otherwise, I'm going to go ahead and close this up real quick. Go ahead and move forward here. So we get into the meat of the bone here on the stretch IRAs. I know that we've seen some renewed interest in the stretch marketplace. With a lot of the assets being passed along these days, we see a lot of your baby boomers inheriting money from their parents. We see baby boomers that are getting older, that are getting into retirement, and they're looking at ways of getting some dollars passed on to their children or getting passed on to their grandchildren, and using a stretch IRA as a great way to get money passed on to the next generation and be able to really stretch out that taxation on those dollars. So when you do a stretch, what you do is you name an individual as your beneficiary on your annuity. Let's say it's a qualified account. Let's say that you pass away in a couple of years. You're passing on $120,000 onto your child. Your child is age 55 when they inherit the money. They're able to take that money and invest it into another annuity and invest it as a stretch account, and then they can stretch out the taxation on those dollars. So instead of having to pay a lump sum payment on the entire sum of money, they're able to stretch those payments out and have those paid out to them as required minimum distributions based at their age of 55, it might only be 2.5% of the value of the contract, and that way they can continue to have their contract growing in deferral and having to take out these smaller RMDs as they get older. They will have to eventually take out more and more money as they get older up the age brackets, but they're able to do that, over a number of years. Maybe they're going to stretch this out for 30, 40 years based on those payments. So it's a great way to avoid a tax bomb. I know that some agents or clients are very concerned when, that their client passes away. They've got a $280,000 IRA. They're going to be passing it on to their child, and their child's in high tax brackets. They've got, good income already. They need to find a way of avoiding that, big tax hit they're going to get day one, and be able to take that taxation and defer it over a number of years in order to pay that down the road. So really a nice combination there on the stretch. And with the annuity companies out there now, we're able to do both qualified and non-qualified monies on the stretch. So really a nice combination there. So breaking down the stretch IRA, of course, when agents or our clients are getting older and they have money in qualified accounts, they have to start taking out minimum distributions, and they need to take out their first withdrawal by April of the year after they turn 7.5. So if your client is turning 7.5 in July of this year, then they have to take out the first RMD by April 1st of 2019, and then they'll have to take another distribution by the end of the year in 2019, and then they'll have to start taking out distributions every year going forward during that calendar year. So something they do need to keep in mind on qualified money is they do have to take out those RMDs. Now, if they do have a Roth IRA, those do not require RMDs, so they're able to use those and keep those growing indefinitely throughout their life period. And then the Roth IRA money is passed on to the beneficiaries tax-free. So Roth is really a nice way to get money also passed along based on the IRA rules and regulations. But, the stretch IRA used correctly can really benefit a client and benefit their beneficiaries, where they can really take out these larger sums of money, reinvest them, and then have the taxation on them based on their age. And moving forward, of course, the requirement distributions based on their life expectancy. And as you get older, the RMD percentages grow. So if you're 80 years old, the RMD might be 7-8%. Whereas if you're 65, the RMD amount is like 3.6. So make sure you are aware of that based on your client's needs. Now, we do have a number of companies that do allow, RMDs or qualified accounts to be moved in. Is stretch accounts. One thing to keep in mind with a lot of these companies, they do not allow a income rider on that account. So if you have inherited IRA money, then you would typically not be able to have an income rider on that policy. I know that we do have Equitrust. Just this year, they are allowing income accounts to be on stretch accounts, so that way a client can put their money into the Equitrust product, have as a stretch IRA, but also still have an income rider on that IRA. So a lot of people that use the stretch accounts are people that do have large amounts of assets in qualified accounts or large amounts of assets in non-qualified accounts. Qualified accounts have been on tax deferral, so maybe they had a non-qualified account. They deposited 15 years ago. They put in $100,000 15 years ago. Now the account's worth $250,000. They've had a $150,000 gain. So they're trying to figure out ways to get that gain passed on to their beneficiary without having to take a withdrawal off that gain to pay the taxes on that, because you inherit a contract that has a $150,000 gain in it. if you're in a 30% tax bracket, you're going to have to pay over $35,000 to $40,000 based on those gains. And they're trying to find ways to really stretch that situation out. And we do have some great options on the non-qualified side also. You've got Great American will do a stretch non-qualified account. Also American Equity will, based on different ramifications. They have to have so much money to invest. Of course, they have to start taking out their RMDs a year after the person passes away, and then they'll have to keep taking those RMDs for as long as they're alive, based on that stretch account. So, what happens when someone passes away? Say Uncle Joe passed away this year in 2018. He has a qualified account that's worth $100,000. They have to take RMDs out this year for Uncle Joe because Uncle Joe is 74 years of age. And then when that money's passed along to one of yourself or a relative, then starting next year in 2019, you're going to start taking out RMDs based on that individual's age that inherited the money. Of course, the younger the person is that inherits the money, the longer you can stretch out those payments. So if you have a 30-year-old that inherits their grandfather's IRA, they could stretch that out for the life expectancy, which might be 50 years for a 30-year-old individual, as opposed to a other individual that might inherit the money that's age 70. So if they're age 70, their life expectancy might be 15 years. You got a 15-year stretch on that versus a 50-year stretch on the 30-year-old. So really a great combination there. So on stretch IRA carriers, I know we have most of our companies will do stretch IRAs. We have Equitrust, Athene, AIG, Great American. We have a lot of different carriers that will do those stretch accounts. I like going to some of the bonus annuities. Maybe your client is age 60. They're inheriting $200,000 of qualified accounts, and they can get into Equitrust. Maybe they're in the state of Ohio. They can get a 10% bonus on those dollars day one. So instead of having $200,000 on their account, they start day one with $220,000, and then they can start taking out their RMDs based on their age starting next year and be able to really stretch those dollars out and really take advantage of that deferred growth. Their money keeps growing as they're taking out these smaller sums of money as they're moving forward. So really a great combination there. But again, if you do have interest in taking a look at a stretch IRA possibility for a client, definitely give me a call. I'd be glad to help you out with that. I know we see a lot of money's being moved around right now on stretch accounts. The key is the money has to go directly from the company where the money is currently invested into the new company. It cannot go through the individual's account, checking account or savings account. It has to go directly from point A to point B. So if the money is sent out to the client, to the beneficiary, then that money will be taxable, fully taxable based on that happening. So you never want to have money sent to a client when you're doing a stretch account. You want to have it sent directly to the company that you're investing the dollars. So definitely keep that in mind on that end. And if you do have any questions along the way, of course, go ahead and get those asked. I'd be glad to get that done for you. I just launched another quick poll here. If you do have interest in getting any additional information on some of the companies that we're discussing today, be it Equitrust, be it Great American, be it American Equity, Athene, just check off yes. I'd be glad to get that information over to you on those carriers and be able to help you out with those situations. Again, on the stretch IRAs, they're much more open to companies that have those available as options. Of course, you do have most carriers. You cannot add an income rider on those cases. They have to be just pretty much a straightforward annuity, no additional bells or whistles on it. But they are available through most carriers. So another thing to keep in mind is on a spousal inherited IRA. So if you have a situation where a husband and wife are living, husband passes away at age 68, the wife is also age 68, she inherits her husband's IRA. It's now her IRA. She can actually wait till she's 7.5 and then start taking out distributions based on her age, because her husband never started taking out distributions because he was only 68 when he passed away. So she can start taking distributions at age 7.5. But if her husband was 75 and had already started taking distributions, she is 65. She inherits this IRA from her husband. She'll need to start taking distributions next year because her husband had already started taking distributions, turned the pipeline on, so then she would need to start taking distributions based on her age the following year after his death. So if she's 65 now, 66 next year, then she'll have to start taking distributions at age 66 on that qualified account. Again, I'm going to leave this poll open for another 15 seconds or so. If you do have interest in getting some additional information on some of our carriers that offer IRA stretch accounts, non-qualified stretch accounts, I'll be glad to get that taken care of for you on your end. So go ahead and close it up. So we do have a couple carriers that do the stretch non-qualified. As I mentioned, Great American is a choice. They've got some great plans you can use on that end. We also have American Equity. You're a little more limited on what you can do with American Equity based on their rules and regulations on the stretch side on the non-qualified end. But Great American just introduced a great 5-year contract. It's called the American Landmark 5. It is available to age 89, so it goes to a much higher issue age for indexed annuities. It's got some great options that your clients can invest their money in. It has an annual point-to-point account right now with a 6.05 cap. It also has a real estate index with a 7% cap. You have a retiree spending account with no cap and a 70% participation. It also has a risk-controlled strategy with a 65% participation. So a lot of different options there for that account you can use as a stretch non-qualified account, and really some good opportunities for your client to defer some of those taxation dollars down the road and really limit the amount of exposure they have up front. So really a nice combination there. Take a look here. Yeah, someone jumped on here that had missed the first part of the webinar. Yes, we will have a taped version of this going out to you this afternoon. So if you did sign up for today's webinar and we've got your email, we'll go ahead and send you the link for the webinar itself, and that'll go out to you here later today. So with the stretch IRAs, I know we've heard rumors over the last few years where they're looking at possibly putting an end to the stretch opportunity. I know that based on some of the rules and regulations coming down from the government here recently, they're looking at maybe going to a 5-year maximum payout on the stretch side. So you can only stretch it out for 5 years versus going out, 15, 20, 30 years based on your client's age that inherits the money. But that has not gone through yet. So we still have an open door policy in regards to stretching out the money, and really a nice option for you and your clients there. But I have had a number of agents going with the stretch accounts in the last few months. Of course, the application has to be filled out a little bit differently. Some of the companies do require special forms for stretch accounts. You have to have the owner, listed in a specific way based on being the beneficiary of, John Doe that has passed away. So you want to make sure you use the correct verbiage on your accounts. And if you're doing a transfer, which pretty much all the time you need to do on these accounts, those transfer forms have to be filled out in a specific way. So If you do have anything you have questions on or need any quotations or have questions on maybe what you should do with the case, it's a stretch opportunity, definitely give me a call. This is Matt Tour. I'm at Insurance Agency Marketing up in Omaha. I do try to keep these to about a half an hour in length on these webinars. We have our latest incentive trip we just announced. It's going to be the Ritz-Carlton in Naples, Florida. Qualification does run through the end of August of 2019. Actually, qualification runs to the end of June 2019. The trip itself is in August of 2019. So should be a great location and great times had by all. Again, if you need some additional information on anything I covered today, definitely give me a call. I'd be glad to help you out. Hopefully we can help you out with some of your stretch accounts here in the next few months. I know with a lot of the baby boomers parents getting older and starting to pass away, you're starting to see more and more lump sums of money being passed on to the baby boomers and so on and so forth. You can look at generation skipping on getting, someone maybe a couple generations down to inherit the qualified money. And that way you have a much longer stretch time to stretch those payments out. But once again, thanks for your time today. Appreciate you joining me in today's webinar on the stretch IRAs and stretch non-qualified accounts. If you have anything you need, definitely give me a buzz. Otherwise, everyone have a great Memorial Day weekend coming up, and we will speak to you soon. Bye now.